Everyone's chasing 3-to-1 risk-reward ratios, and they're bleeding accounts doing it. You've been told your entire trading career that if you're not aiming for at least 2-to-1, preferably 3-to-1, you're leaving money on the table. That sounds smart on paper. Risk 100 to make 300. You only need to win 25% of the time to break even. The math checks out. The logic is flawless, and it's completely destroying you in 2026. Here's what nobody tells you. Chasing wide risk-reward ratios in this market is like trying to hit a moving target in a hurricane. The setups that offer clean 3-to-1 don't show up often enough, and when they do, the market fakes them out more than it follows through. You're sitting there waiting for the perfect trade while the market is handing out easy 1-to-1 setups every single day. You ignore them because they don't fit the 3-to-1 religion. And at the end of the month, you've taken 4 trades, won 1, lost 3, and you're barely breaking even or down. Meanwhile, there's a group of traders running 1-to-1 setups, and they're crushing it, not because they found some secret strategy, because they're taking more trades with higher win rates, and their psychology stays intact because they're winning more often than they're losing. Let me show you exactly why 1-to-1 is about to dominate this year.
The problem with 3-to-1 setups is simple. They require the market to cooperate for a long time. You need a clean entry, minimal pullback, and sustained momentum to hit your target. In 2023, that happened regularly. In 2026, it's rare. The market moves fast, reverses violently, and chops more than it trends. By the time your 3-to-1 target gets close, you've already been shaken out twice, or the move reverses and you're stuck holding through drawdown hoping it comes back. Here's what actually happens. You find a setup that looks like it could go 3-to-1, you enter. The market moves halfway to target, you're feeling good, then it pulls back and stops you out. Trade's over. You just took a full loss chasing a big winner that never materialized. You do this 4, 5, 6 times. Your win rate is 30% because 3-to-1 setups are hard to hit. And even though the math says you should be profitable, you're not, because the emotional damage from losing 78% of the time is destroying your execution. Now let's talk about 1-to-1. The setup appears, you enter, target is the same distance as your stop. The market doesn't need to cooperate for long, it just needs to move in your direction for a short window. You hit target, you're out. Even if it reverses 5 minutes later, you already banked the win. No stress, no hoping, no watching it go halfway and come back, just clean execution, quick profit, move on. The trader running 3-to-1, let's call him Connor, he's taken 9 trades in the last 3 weeks, won 2 of them, lost 7. His win rate is 22%. On paper, he should be slightly down or break even, but he's down 14%. Why? Because 2 of those losses weren't clean stops. He moved them, hoping the trade would come back. One of his wins, he exited early out of fear. He's not trading the system anymore. He's trading the emotional wreckage of losing 78% of the time. The trader running 1-to-1, let's call him Luis, same 3 weeks, he took 24 trades, won 14, lost 10, 58% win rate. His account is up 11%. Not because his setups are better, because he's winning more than he's losing, and that consistency keeps his psychology stable. He's not scared to take the next trade. He's not moving stops. He's not exiting winners early. He's just executing, and the wins keep coming often enough that his brain stays balanced.
Here's the psychological piece nobody talks about. Your brain doesn't care about expected value. It cares about win rate. When you win 55–60% of the time, your brain releases dopamine consistently. You stay confident, you stay patient, you trust your system. When you win 30% of the time, even if the math works long-term, your brain interprets that as failure. You start doubting, you start hesitating, you skip good setups because you're scared of another loss. Connor knows his 3-to-1 system is mathematically sound. He's back-tested it, he's seen the results, but in real time, taking 7 losses for every 2 wins feels brutal. He's constantly questioning whether his edge still works. He's tweaking his rules after every losing streak. He's checking forums to see if other traders are struggling. He's not confident anymore. And trading without confidence is like fighting with one hand tied behind your back. Luis doesn't have this problem. He loses, sure, but he wins more often, so his brain never spirals into doubt. He takes a loss, shrugs it off, knows a win is probably coming in the next trade or two. His confidence stays high. His execution stays clean. He's not second-guessing himself constantly. He's just flowing with his system. And the system works because he can actually execute it without emotional interference. Here's the shift you need to understand. In 2026, consistency beats size. A small win you actually capture is worth more than a big win you keep missing. Connor is theoretically aiming for bigger gains, but in practice, he's barely profitable because his psychology can't handle the losing streaks. Luis is taking smaller wins, but he's capturing them consistently, and his account is growing steadily because his mind isn't broken.
Let's get into the framework. Why one-to-one works so well in 2026 specifically. First, trade frequency. When you're hunting 3-to-1 setups, you're being extremely selective because you need very specific conditions: strong trend, tight consolidation, clear support or resistance to hide your stop behind, and enough room to run for that wide target. Those conditions don't appear often. You might find 2 or 3 clean setups per week if you're lucky. With one-to-one, you're not waiting for perfect. You just need a decent edge, a breakout with momentum, a pullback in a trend, a reaction off support. These setups show up constantly. You can take 15, 20 trades per week without lowering your standards. More trades means more opportunities to express your edge. And if your edge is real, more opportunities equals more profit. Connor takes 4 trades per week. He's sitting around most of the time waiting for that ideal 3-to-1 setup. When it finally appears, the pressure is massive. He needs this trade to work because it's his only shot this week. If he loses, he just wasted 3 days of screen time for nothing. That pressure makes him hesitate on entries, hold too long on losers hoping they come back, and exit winners early out of fear. He's not trading with freedom. He's trading with desperation disguised as patience. Luis takes 4 trades per day. If one doesn't work, there's another one in a few hours. No single trade matters. He's not desperate. He's not attached. A loss is just noise and a larger sample size. He can execute without emotional weight because he knows the next opportunity is right around the corner. That mental freedom is worth more than any risk-reward ratio on paper. Second, win rate advantage. Let's be real about this. Hitting a 3-to-1 target is hard. The market needs to move cleanly in your direction for an extended period without pulling back enough to stop you out. In choppy, volatile conditions like we have now, that's rare. Most moves don't have legs. They spike, they stall, they reverse. If you're holding for 3-to-1, you're getting chopped out constantly, even when the direction is eventually right. With 1-to-1, you only need a small move. The market spikes in your direction, you're out. Doesn't matter if it reverses 10 minutes later, you already captured the win. This is why Luis has a 58% win rate and Connor has a 22% win rate. They're both good traders. They're both reading the market correctly most of the time. But Luis's targets are achievable in current conditions. Connor's targets require a market environment that doesn't exist right now. Third, psychological sustainability. This is the big one. Trading is not a one-month game, it's a long-term game. And in the long term, the strategy you can execute without breaking mentally is the strategy that wins. Connor might have a better expected value per trade on paper, but in reality, he can't sustain the emotional toll of losing 7 out of 10 trades. By month 3, he's burnt out. He's tweaking his system constantly. He's losing confidence. He's thinking about quitting. Luis's approach is psychologically sustainable. Winning 58% of the time feels good. It feels like progress. He's not fighting his brain. He's working with it. He wakes up confident. He executes without fear. He's not on an emotional roller coaster. And because his psychology stays intact, he can trade this system for years without burning out. That long-term sustainability compounds into wealth. Connor's 3-to-1 system might look better in a spreadsheet, but it's not tradable in the real world because humans aren't robots.
Here's the part nobody wants to admit, because it kills a lot of ego-driven trading advice. Risk-reward is not a goal, it's a constraint. You don't decide you want 3-to-1 and then force the market to give it to you. The market decides how far it's willing to move, how fast, and how clean. Your job is to extract what's available, not what looks impressive on a spreadsheet. In 2026, the market is offering short, sharp moves, liquidity grabs, fast reactions, mean reversion, momentum bursts that last minutes, not hours. When you insist on 3 to 1, you're essentially saying, I refuse to get paid unless the market behaves like it did years ago. That's not discipline, that's denial. 1 to 1 aligns your strategy with current market structure. You're taking profits where liquidity actually exists. You're exiting where reactions naturally stall. You're not overstaying your welcome in a market that punishes patience more than impatience right now. And here's the key shift most traders miss. When you move to 1 to 1, you stop trying to be right and start trying to get paid. You're no longer emotionally attached to catching the whole move. You don't care if price goes another 200 points without you. That's irrelevant. You executed your plan, captured your edge, and moved on. That detachment is power. This is why accounts start growing smoothly instead of violently. Connor is swinging for home runs in a market built for singles. Lewis is stacking singles over and over, while Connor keeps striking out. And over time, those singles compound faster than the occasional home run ever will. So, here's the takeaway, and this matters. If you're struggling right now, it's probably not because you're bad at reading the market. It's probably not because you lack discipline. It's probably not because you haven't found the right strategy. It's because your targets don't match reality. Trade smaller targets, win more often, protect your psychology, and let consistency do the heavy lifting. That's how you survive this year. That's how you grow in this market. And that's why in 2026, 1 to 1 isn't a downgrade, it's an upgrade.